Well, the hottest sectors cooled big time today. We're talking industrials and energy stocks gave back big chunks of gains, in part to ambivalent comments on a potential China trade resolution from President Trump. Companies, by the way, in a variety of industries also navigated tough conference calls for the earnings that triggered massive sell-offs. The results were these big sell-offs in Toll Brothers, AutoZones, but there were many others. And then after the bell, Red Robin being skewered on a big earnings miss. Now, the only sector that enjoyed solid gains today were the financials. That was ahead of the House vote that we just reported to you, the breaking news. It's going to whittle away some of the onerous parts of Dodd-Frank. Part of it, treating banks with $50 billion or more in assets as it's the same as you would treat these mega money center banks. It's always been an unfair and unwise decision. That's why the Economic Growth, Regulatory Relief and Consumer Protection Act today made it through. Made it through the Senate 67-31. In fact, 16 Democrats backed it and also 33 in the House backed it this afternoon. Meanwhile, the banks are moving on. U.S. banks did extraordinary in the first quarter. Part of that, of course, the lower taxes, but even without it, the data was impressive. Think about this. Their net income, $56 billion, up 27% year over year. You take out the tax cuts, it's still almost $50 billion, up 13%. Less than 4% of banks did not report a profit during the quarter. That was the lowest amount since 1996. So the banks have a ton of cash. They're being freed up from the clutches of Dodd-Frank. So the question right now is, will that cash find its way to Main Street? Joining me now, Lindsey Bell, CFRA Research Investment Strategist, and Oliver Pursche is back with us as well. Lindsey, all right, the banks have no excuse. We want loans. Now, I know the banks have always said, well, there's no loan demand, but I don't necessarily believe that when I talk to regular folks out there. What do you make of the things that happened today?
Well, I think this is great for the regional and the smaller banks. And we've seen those banks actually run up this year. Year to date, the regional bank index is up 10%, while the larger banks are about flat, up about 1%. But this, I think, will add to the momentum that we're seeing because it is the small businesses that need the loans, and they haven't been getting them. They've been deprived partially because of this onerous regulation known as Dodd-Frank.
Yeah, you know, Oliver, we talked about some of the potential impediments to this market and the economy. Certainly, this could be a win and, you know, a tailwind if these banks now say, okay, we're going to start to lend more. Even, by the way, these larger banks, to Lindsey's point, you know, they're not really banks anymore. They're just trading centers, and I'd love to see them get back to part of their roots of lending money.
Yeah, I mean, look, it's a positive for banks. There's no questions about it. And I agree with Lindsey. The small and regional banks are the bigger winners in this. Let's not forget another tailwind that the banks back is the Fed has raised rates several times, 5 times in total. And, you know, you've seen loan costs go up, but your deposit rates have barely edged. I mean, so, you know, that spread is widening, and that's very good for the bank's balance sheet and income statement. So that's a benefit as well. That's probably going to start changing. So, again, not to sound overly negative, but that's one area to look out for. If you start seeing deposit rates become more competitive, and in some banks they certainly already are,
right.
Then, you know, that's going to pressure earnings a little bit.
Well, let's talk about earnings because we're at the tail end of earnings, but we're getting a bunch of retail names this week. I think TJ Maxx was able to maintain a gain, but we saw Kohl's up big, then it got slaughtered. AutoZone got crushed. These names, the Red Robin after the close. Are these stocks priced for perfection, or should we glean something even deeper or maybe even more ominous from what's happening with these stocks?
Oh, you know, for me, I think that when you look at the retailers, you've got to be very picky and choosy. The sector overall moved up nicely off of a fourth quarter that was really solid and first quarter numbers that seemed to be okay. But the retail numbers coming out of Q1 for the economy were a little bit weaker. We're seeing that kind of pick up in Q2. I think this is a stock picker's trade here, and I think it's tough when you got the Amazon overhang on this group.
Everyone's saying weather. It's not just retailers, it's industrial and all of them. A lot of times that's an excuse, although it was
excuse for 10 years, right?
Yeah.
So.
Although weather was pretty unusual, though, this year, early this year.
Yeah, well, look, I mean, so we're not huge fans of the retail sector. We think consumer discretionary shares are going to perform better still than consumer staple shares, and we've certainly seen that year to date. But to Lindsey's point, it's very much a stock picker's market. And from our perspective, quite frankly, there are better areas to put new cash to work than retail in general.
I got you. It's interesting that we pay up for an RV, but not for toilet paper and soup. All right. Thank you both very much. Appreciate it.